Yeah, so I think that this is one of those once in a generation opportunities. And, we put out a report last week and I basically looked at the best performing trades of the last 50 or 60 years. And, the one thing that they have in common is, they start out with huge skepticism and scarcity of capital, but by the end, the dominant fundamentals get so exciting that they become, the only investment worth owning at the detriment of everything else. And so once you reach that point at which that's the only thing investors want to know, they'll pay any price to own it, that sets up for a huge underperformance and a rotation into a leadership elsewhere in other markets. So, you go back to as early as the 50s and 60s, you had the US Nifty 50, these huge blue chip, large cap stocks, which dominated their industries, had the best cash flows. That was the only thing you need to own. And then, the multiples got crazy and it set up for 2 decades of underperformance for the US. Then you obviously had the tech and telecom stocks in the 90s. That's all you had to own with the internet wave. That didn't work out turned into the lost decade in the US. And then here, the last 15 years, we've had the rise of U.S. large cap growth and culminating with the rise of the Magnificent Seven. Again, these are the only stocks worth owning. That's usually a warning sign that the opportunities are probably elsewhere.
So I hear you, Dan. You could have made this argument, though, last July and also last December. So why is it the argument now with big tech?
Yeah, I think you can look at it from a couple different ways, Alex. I mean, one, from that long-term perspective, thinking about what the biggest trades are going to be over the next 10 years and what the worst trades will be. I mean, you've never before seen, relative to all those other, concentrated stories I mentioned, this one is actually more extreme from a concentration perspective and evaluation perspective. The U.S. has gone from 40% of the global stock market to something like 63, 64%. The Mag 7 has gone from 7 to 30% of the U.S. And then on top of that, the U.S., trades at a record, premium to the rest of the world, 60% more expensive than everywhere else in the world. So there's that long-term story. But I think the question you're really asking, Alex, is, what's changed recently? And I think here it's really about the cyclical story. And I think that earnings, a lot of people would disagree, is going to continue to accelerate, as this recovery matures. But it's not going to be driven, by these, big growth sectors. Their earnings have been strong, but if you look at the earnings estimates, they're actually set to decelerate in the coming quarters. So what do you want to own? The sectors that are going to drive that acceleration. I think that's going to be small caps. I think that's going to be industrials, energy, emerging markets even. I just don't think it's going to be these names, and that's going to lead to some potential disappointments.
So you make an interesting point about earnings growth for those cyclicals. On the flip side, though, that kind of earnings growth doesn't square with 7 rate cuts priced in from the Fed. So does that mean that you expect the Fed to not cut as much? And then does that then have a knock-on effect into how those cyclicals perform?
Yeah, actually, I don't know that the Fed is going to be a huge swing factor. I mean, obviously, it's what everybody wants to talk about. I don't think that the Fed's going to cut 5, 6, or 7 times this year. I don't think they're going to be anywhere close to that. I just don't know that that's going to have a big, be a huge swing factor for markets. Ultimately, I think what's going to drive markets is going to be growth. And I think in the near term, growth is going to be better than expected. But as you get out to the second half of the year, I think the visibility is quite low. So you need to be on your toes and look out for those signals that perhaps at some point growth is going to be rolling over. But to be clear, we're just not seeing any of those signs right now.
So then if you take a look at the rotation that you're expecting then from big tech to the cyclicals, what does that rotation wind up actually looking like?
Well, I think this is actually a pretty classic rotation, Alex. I mean, there's nothing necessarily that unique about this particular earnings recovery. If you look throughout every earnings recovery, what happens is, people, when earnings are terrible, are piling into the small and shrinking group of companies. They're able to continue to put up really strong growth. That continues to be the case, and part of the reason why market leadership has been very narrow. But as growth broadens out and more companies can put up really strong earnings, there's a natural, the market becomes comparison shoppers. So why pay 30 times for the same growth that you can get for companies that trade at single-digit multiples? That's the sort of thinking that happens almost in every single earnings recovery.
So for the NASDAQ, though, for example, do we see a bear market in this sort of scenario that you're looking at? Or it's not that dramatic, it's just more about the cyclicals?
Yeah, I mean, I think eventually you are going to see a bear market. I mean, I've gone on so far as to say I think that this is a bubble, and I don't use that term lightly. So eventually, that suggests that there's going to be a reckoning. I don't necessarily think that that has to happen in the near term. I think initially, really the story could be underperformance as investors realize that there's other really attractive growth stories out there. I think maybe the next shoe to drop that really causes that potential downside for the sector is when things get really bad. Now, that could be 6 months from now, and that could be 2 years from now. But when growth really starts to roll over, I think people will be surprised, as they always seem to be, at how cyclical these companies' earnings are. Remember that if you go back a year ago, these companies that everybody have the best growth now, they were the ones leading us into the profits recession that we saw. So they are clearly cyclical. People just forget about that.